we are tracking the trades in the banks as earnings roll in. Bank of America and Goldman Sachs both out with results today. Goldman posting blowout results for the fourth quarter, driven by strength in its investment banking unit, while Bank of America reported mixed results, record low rates weighing on revenues for the quarter. Both stocks finishing the day in the red. I feel like we see this all the time. The first batch of banks turn out to be okay. The whole group trades up. Then the second batch don't get so lucky, Tim.
We've seen it, and I think we've spent a lot of time talking about how the yield curve changes that we've seen in the new year didn't mean anything to net interest income in the fourth quarter. I think the issue at Bank of America is that the fee income was less than expected. Meanwhile, the credit and the capital story there are better than expected. So what would you rather be investing in now with a company that I think is still very cheap relative to historic and even to peers, at least to JP Morgan? So I'm long Bank of America. There was no reason to be buying banks aggressively into any of these earnings after, in many cases, a 40 to 60% move really since November. And I think that's the same story here. You do have net interest income tailwind in your favor. I mean, think of the conversation we were having last week. All people could talk about was higher interest rates. Nobody's talking about that today. Well, you should be thinking about that if you own a money center bank.
Yeah. Karen, what'd you make of these quarters?
I agree with Tim exactly on Bank of America. I own Bank of America as well. I don't own Goldman Sachs. There's nothing not to like about Goldman Sachs' quarter, except exactly what Tim said. The stock is up, I don't know, nearly 50% in not a lot of time. And their quarters tend to be much more lumpy. And so the street doesn't give the same multiple to lumpy earnings as it does to more predictable earnings. So that's why Bank of America has higher earnings. And I think it's a little bit of a delay to get that net interest margin improvement for Bank of America. They had a lot of deposits that they weren't able to earn on, and I think they'll be able to expand that margin in the first quarter. So there was nothing not to like about Goldman Sachs for sure, except that it had run up. Same a little bit for Bank of America, was a little light. The debt capital markets wasn't great, although equity capital markets was great. I own Morgan Stanley. They're going to report tomorrow. That's a bit of a different business model. That's wealth management and investment banking, and I think both of those will do well tomorrow. But maybe the stocks run up too much in front of it.
Yeah, I mean, talk about lumpy. Management at Goldman already said that 2021 may not be as good in trading. Surprise, surprise, Guy.
Well, of course, you mentioned lumpy, and I know you know this, but that was obviously Bill Murray's nickname in the great movie Scrooged. But you know what I do. I digress, as I typically do. What I will say is, in terms of Goldman Sachs, this was a $190 stock on November 2nd. So just look at the run that it's had. And this is a stock that goes either side of book value. And now at about 1.35 times book, you wonder if it's sort of at the extended side of the pool. I'm not saying it's getting back to book, but it would make a lot of sense to go back to, I think, the July highs, which are about 245, 250. Nothing wrong with the quarter. Nothing wrong at all. I think it does that back and fill. But Dan Nathan, by the way, has said for a long time that Morgan Stanley is the best-looking financial chart out there, and we're going to find out tomorrow if he's right. He's been right. My sense is he will continue to be right.
Yeah, you still like Morgan Stanley going into the quarter, I assume, Dan?
Well, you know what they say about a blind squirrel, Mel. You know, that was the one. Listen, I think for the very reasons that Karen just mentioned, you know, the diversification in their streams. And I do think that you're going to see, like you mentioned, about the lumpy trading. I think you're going to see really, really difficult comparisons on investment banking, too. So, yeah, I'd stick with Morgan.
Shepard Smith here. Thanks for watching CNBC on YouTube.